Hello traders, this is a weekly video. I'm recording it on Saturday. It's 4 p.m. and this is the first one. There's going to be two videos. This is the first one regarding bigger picture, since there is a lot of thing to cover and it would be better that we have two videos. Now, this is our usual comparison, DAX Index Daily and DAX Futures Daily. We got a tag on a first downside target on Thursday. That would be Fib 38.2 retrace of this move here, which would be the February move, and 38.2 was right there at the upper end of a former gap. Big gaps are likely not going to be filled on a first attempt, and on a first push down, this gap was filled only for 26 points. Then on Friday, it was almost filled. But as we can see here, still around 32 points was left, although market went below this gap later in the after hours session. Gaps on index can be filled only in regular trading hours session or RTH session. As we can observe on futures, you see where the futures close is, where the futures settlement on Friday is, also right at the 38.2 of the move on futures. Lows a bit different, since tariff low, also known as February low, was made in the pre-market session, therefore visible on futures, while not visible on index like this. So this is the bigger picture. Bollinger Band is here on futures. As we can see, also price reached the vicinity of daily 20. Now, in these moving averages that I'm using are industry standards. Daily 50 meaning daily simple moving average 50, daily 200, and daily 20 would be, when we are observing Bollinger Band, the middle line. The midpoint of the Bollinger Band is always daily simple moving average 20. Now, this could obviously be tagged next week. Next week we do have some catalysts, but before that, let's just observe other markets as well. A bit of a history lesson. DAX was and still is a leading market. DAX also had 6 green weeks behind. When we compare a weekly chart, which would be this one, which I often use, comparing DAX Index weekly with S&P weekly, this move prior to this week consisted of 6 green weeks. This, which was here rounded with these ellipses, were a comparison of previous 4 up weeks on DAX versus 4 sideways weeks on S&P. S&P, which only had a higher low and was pressuring 6,100 important level of December high, but was unable to make a significant upside follow-through. And as you can see here, now weekly close is well below. What happened on both of these indices, the start of a down move was a false break, but on S&P and on Nasdaq, this is Nasdaq, that false break was over the previous swing high, while on DAX was over the previous 2 daily highs. Observe Nasdaq, for example, this range here. What are the tops and bottoms of this range? How that went? Here was a spring or false breakdown or look below and fail. Classic bullish setup, great setup. After which market went all the way up to the origin of a down move. This here would be obviously December swing high, and now we are having this same like on the S&P and these other markets. Dow Jones for some time in a range, and Russell being Russell, the weakest one of all. And these here tails on a weekly chart, those are actually tests of daily 50 on daily chart. I will show you that as well later. So this is how these markets are doing. And back to DAX, what we had here was a big outlier move, in which, like written in every single morning notes up to this week, that we can only guesstimate when the market, which was overdue to make a pullback, when it is actually going to make a pullback. One way of determining extended markets would be using Bollinger Bands and observing how many days are they grinding like this on the upper end of the Bollinger Bands. Next would be measuring the distance from daily 50. Now, this is everything here is, something that I'm speaking from experience. It is not written in stone or anything like that, just something that I have observed during many years of watching charts and came into some conclusions. For example, 4 open gaps is likely too much, both on DAX and on the S&P. However, we got the situation that the DAX had 5 open gaps. Not 4, but 5, versus only 1 on the S&P. That one, for example, was on all of their indices, and Russell filled that gap, for example. Now, being the weakest one. Then, from daily 50 to the price, that would be like 7% is something that is really extended. And on Monday and here on these highs, DAX were actually 9% away from the daily 50. And 5 days gliding on the Bollinger Bands. So this is the time when although we had here in this upper end a bunch of good long setups, and we took those long setups, and there were great pullback longs and even some plain vanilla breakout longs. We need to be aware of what the market is doing and to have that large time frame awareness to question the risk also. Where is the risk, and how market is going higher and higher, it becomes exponentially more riskier and riskier for taking new long positions. The ones who took long positions down there at December pullback low, January pullback low, even here on a tariff low, which was great also to take along, although it was very, very early in the pre-market session. He didn't have anything to worry about, but the ones that did had everything to worry about was people going long here, swing long at the top end of the Bollinger Band. That is really never a very good idea. Although, for example, going long here, see, you would get hundreds of points. So always be aware of the risk. What kind of risk are you taking? Is it is it a low risk, normal risk, or high risk? And in this case, it was a high risk, and on a trend down, they a bearish engulfing candle engulfed the previous 3 sessions, and then obviously all of those people were liquidated. The Johnny comes lately buyers. One of the rules that I like to quote in these situations would be the rule from famous Bob Farrell, and he said that exponentially rapidly rising markets like this one can go further than you think, which it went, but when they start to correct, they're not going to correct by going sideways. And that's the thing that we got, because in the first 2 down days, market lost 650 points and already tagged our first downside target. Now, all of this was also happening in timing of going into the OpEx period. So when you cross all the data that you have, and you know, hey, this market, this week is OpEx week. And we know from every single OpEx before, since we have a prep and since I always post that OpEx chart, we know that in significant period, there is behind our back, there was 50-50, that there is a 50-50 chance of market making swing lows, or in our case, swing high in the OpEx period. And we got the swing high. Now, when you know all of that, then you know how to gauge the risk, and also we were prepared for the trend down day on Friday on the US markets. How come? Because we got that S&P chart all the time, on X, in additional charts PDF file. In every single recap, I'm always talking about the S&P, so if we were not prepared, we shouldn't really be at least surprised by that trend down day. European traders need to use that advantage, especially when DAX is a leading market. I already showed you that on a daily chart. Where is December high on DAX? Down there, while on S&P December high was actually here. And look what happened on S&P. High was to the point, basically test of the upsloping trend line, and they had here, see this visible bearish divergence. Same on Nasdaq. Both of these highs were false breaks above the previous swing high, while again on DAX it was a false break above these previous 2-day highs only. So about potential targets now, what could happen if DAX continues to the downside? First of all, what are we having for the next week? Tomorrow is German elections, and that can really be something to push the market directionally for some period of time. The example here would be French elections that were on 30th of June and 7th of July 2024. This chart shows you comparison of DAX being the blue line here and CAC 40 French index being the red line here. This anchor here would be swing low from October 2023, and you see how much more DAX went higher, 49%, while here it's like 10. So a much bigger gain was on DAX than on CAC. But in these here parts, the elections kicked somewhere here. This would be the 30th June, and then a week later. So this push down here on DAX and this push down here on CAC, both were around -7.5%. That was the French elections influence. And then if we go now to the recent history, you see when I anchor here to the August low, what was happening here, and especially here, they were also going hand by hand in this period. But you see from the January pullback low, what kind of percentage was on CAC and what kind of percentage was on DAX. So DAX is a leading market, and when we go to the left, then we can see how much more DAX went higher than actually than CAC. But this is important. Election influence. So there can be some influence, and we can bet that the open on Monday is going to be a gap open. Just the question is going to be a gap down, or is it going to be a gap up? Here we still have small part of this big gap left. That would be this here. So again, just 32 points. And these arrows would be breakout or breakdown arrows on daily chart, meaning if they hold Friday low, we could get a push to the upside, given the fact that we already had the 38.2 fib retrace done, and below this here and below absolute low of Friday, which would be low on futures. Likely the market is going to at least test daily 50, and you see that daily 50 is in line with the halfback of the February move. Finally, let's not talk just about February move. What if we get more downside than that? Then I think we would only need to see a fib from January pullback low all the way to the all-time high, and to observe, do we have some confluences with fibs on this kind of fib? Well, not so much, but 38.2 comes in line approximately with January high. Here, we are not able to see that on daily chart, but here in this space, around the top edge of this previous, right there, where the top edge is of this previous 3-day balance, that was also a spike low of the US CPI. And as we can remember, on that Wednesday, market made a scary dip right into our main support zone, from which it was a bounce. And one of the concepts that we can apply there would be also that news-driven moves tend to retrace. So there would be no wonder if this market goes to the downside that they make a complete reversal of that move like this to here. So that will be something about the targets. DAX weekly versus S&P weekly. This is Nasdaq. I already showed you that. Russell and I'm sorry, Dow Jones and Russell. So that would be it about the bigger picture. Volatility likely is going to be increased next week, not only due to the German elections, but we do have some other here data in the calendar. On Monday, Germany for business climate. That's usually nothing much. US consumer confidence on Tuesday. On Wednesday, new home sales and G20 meeting. US preliminary GDP on Thursday and unemployment claims. German preliminary CPI on Friday. Now, German CPI is not something that can move the market like American CPI, mostly due to it's not really the same weight, and the data itself is collected through all German states during the day, and you're not going to get it all of a sudden, and therefore that effect is usually diluted. But on Friday we have the US core PCI index, which is the favorite inflation gauge for the American Fed, and therefore that is out of the scheduled data for the next week. That is the most important one on Friday. Before that, however, we have Nvidia reporting on Wednesday after the close. Now, Nvidia as a major player that can make a big impact on Nasdaq and then on the S&P, since tech sector in the S&P is more than 30% nowadays. And then if S&P moves, then that moves all other markets. And therefore DAX can be moved by that as well. We already had big moves on that, and directly on Nvidia, directly on Nvidia earnings, we had here down below a famous Nvidia gap, which was, see when that was in February 2024, a gap that was filled several weeks later on the S&P, but on DAX it actually took 6 months. This is the famous Nvidia gap, after which all markets went directionally higher, including DAX. So yes, those big companies and their earnings can move DAX as well. That's the takeaway. So that would be it for this edition of DAX bigger picture videos. I wish you a pleasant weekend and good trading.